GETCRACK. Wake up, motherfucker. GETCRACK. Wake up, motherfucker.
Hello. Okay, it works now. Sorry, guys. I don't know. StreamYards was fucking up for a while. I had to double check my mic wasn't broken or something. Oh, I was afraid I had to buy a new mic. Yes, Rosh Hashanah is coming. We are getting ready now. Let's look at Chinese stocks tonight. Everybody loves Chinese stocks. Everybody wants to buy them. Buy them high, keep going higher, right? That's just how it works. Alrighty, let's go. Let's see how they're doing today. I think they're going to hit a massive resistance. Yeah, that's what I thought. It's hitting a massive resistance. I might short it tomorrow. All right. If you're a gambling type, you might as well short it. That's how it's going to be. Let's see. I'll show you what I see. All right. See that orange line? Ooh boy. So yesterday they had a nice little break. October 1st is National Day. Mao Zedong declared the People's Republic of China. They had the day off. Today, United States open had a lot of pushing of those shares up while the Chinese were taking their little break. And guess what? Tonight they just kept pushing it a lot higher. But I think this is the final leg. I mean, sorry guys, I don't know. Okay, let me close that. I have my YouTube thing up. I gotta close, otherwise you're gonna hear an echo now. All right, so I did not expect this at all. Like for it just to rally all the way up to the most high resistance here. And if I zoom to the weekly chart, I was thinking it was gonna do this. Like it will hit here, bounce back, and then gradually make it to this point. But since we're up here, expect a violent reaction back down. Yeah, this means it's probably going to be a good short. I hate to say it, but if you want to short this bad boy, you should do it now. If you're shorting, you can use the ETF here. You can borrow the shares and try to short it from that point of view, or you could go to individual stocks. I'm lazy. I'm not going to buy a margin account. So shorting that way requires them, or you can use options. I guess you know how to use options. You can do that as well. But you can use yang. All right. This is the cheap way of doing it. Yang. This is the opposite of yin. So this is 3 times the opposite direction of FXI. All right. So you see that FXI over here. Let's see. Last week was about 18.5%. Yang should be going the other way. 50%. That's about. I mean, it's not really accurate. Let's put it that way. It's roughly three times, right? Because it tries to track it every day, but there's going to be errors in the tracking. It's not a perfect instrument. And I guess tomorrow, let's say it drops to around $3 or something close to there. I'll probably start buying. Whatever. I'll take a gamble. Yeah. So let's continue our Wyckoff discussion, and we'll use the Hang Seng Hong Kong Index. So remember last time I was talking about Wyckoff last week. Okay. So let's look at the different phases of the chart here. Okay, let's go there. Let me zoom this back. Man, I wish I had a mouse. Probably should get a mouse. Doing it this way is pretty annoying. Yeah, I should get a mouse. Anyhow, let's get rid of this secondary test. Okay, let's get rid of that. So this follows the schematic pretty well. So this is an accumulation schematic, all right? And we'll go over the terminology again after I go through this chart. So we first hit a preliminary supply. So once it has its downturn, right? I mean, it had its downturn over here. So I suppose you could say this is a preliminary supply down here. Or you could say it's actually somewhere around here. I mean, that's up to you. It's not really important per se. As long as you recognize that there's a selling climax at this point here. Selling climax. So this is where this large candle, green candle, you see with a lot of volume. So that's a pretty good selling climax. Now, that's not complete. We're not complete yet. We have to have like something where it's going to have an automatic rally. So this can, I mean, I'm kind of debating this. I mean, I could say that this is a selling climax over here. I mean, yeah, that could be it, because this could be an automatic rally, right? Automatic rally right here. But for the sake of it, let's just say this is the automatic rally. You just like here, bounce back up, something like that. But it's kind of fluid. They don't have to exactly match this diagram exactly. So either one could be true. But in any case, let's just say this is a secondary test in phase B, because I'm not going to say there's two of them. I'll just say that it has a reaction back up to that automatic rally level around here, right? So we get it back up here to this area where it used to be. So let's say this is phase B, secondary test, and it goes back up to this area. Then we start having this downtrend, down. We hit the spring right here. Okay, this is a mistake. I should have put test. All right. You have a little test here. Then you have the actual rally into phase D over here. So this LPS is the last point of supply. And then the final thing is the sign of strength, which we are currently witnessing. Now, what I expect is there's going to be pullback action. We're going to test a little bit here before we get out of this range altogether. This whole range started way back when we dropped during about COVID-19. So I could say like, yeah, COVID-19 here is really where everything started. And then, China followed the US market back up, but right around here is when the Chinese government started attacking all their high-tech companies. And then after they did that, they started banning Bitcoin mining. Then they started restricting tutorials for students studying tests. So a lot of heavy regulation of industries. And this is where they just popped. And the final effect was the real estate bubble that they went after and popped. So they completely popped all the way down to here. After it reached a peak panic mode, the second drop here was due to Xi Jinping finally saying that he's going to be king of China, taking over all the roles that used to be divided up into three people: the premier, the head of the party, basically the party chairman. So all those roles have been rolled into one, the presidency. So the president of China now controls every aspect of the government. In any case, that doesn't matter. I'm just a trader. I don't really care about investing in China long term. I just see an opportunity to buy. And I think if you missed these areas, yeah, I recommended some Chinese stocks to people over the years to say, like, if you're a bottom feeder and you wanted to grab things on the cheap, like you don't mind holding when it's in a downtrend, this area around here would have been good to buy. So let's say you missed that, there will be another chance to grab it. Now, one of the tech stocks that probably is undervalued is JD. I think my cousin probably started buying when it dipped below 30. So she started like just accumulating around here. And now it's up to 40. It's been doing pretty well. I think another one is Baba, BABA. That's kind of people's favorite. Has a nice steady base. It doesn't look as extreme as JD, but JD is probably more undervalued. Yeah, I think, well, I don't know if it's going to make it back to 300, but let's just say you never know. Anything's possible with this kind of base. It's quite a large base that is made. And then all the stuff I mentioned this afternoon about these more risky stocks, TAL, TAL, EDU, GOTU, which are all tutorial educational companies where students can do their extra tutoring. The Chinese government has banned that. I mentioned that earlier, from doing tutoring for state exams. So they don't want rich kids to get an unfair advantage over poor kids when it comes to doing their equivalent of SATs. And they have multiple levels of SATs, right? And it's just not like America. Like every grade has tests in order for you to move on to the next level, I believe. I believe that's how it works. And we have TIGR and FUTU, which are basically the Robin Hoods um, of China. So if the government is stimulating and telling people also that they're helping the stock market, actively helping it to go up, I think, yeah, you'll see more activity in these type of companies that have to do fintech, kind of like Cash App too. I think they have Cash App like services and stuff for Chinese. So these companies definitely worthwhile looking at. They have a strong movement. Another one is KC. I haven't, I don't know too much about this one, but it is an interesting chart. Very depressed, but it moves quite well. Let's just say it has high beta. Okay, we can go over that, what that means by high beta. But you see here, it peaked out at about 77, probably had a initial opening in the U.S. markets and had an initial pump here in 2021, from 2021, where all the tech companies were. And then once Jerome Powell came in, started cracking down, Chinese crackdown, and then Jerome Powell increased the interest rate, you can see it completely collapsed down to here. So I think they do cloud and AI, maybe too. I'm gonna have to look it up what they really do, but I like the way the chart's forming now. So after this big move, I would say put this in your penny stock list. If you got an IRA, hey, you want to take a gamble, put a few $1,000 in here, and when it pops to like $10, so that's a 3x. Yeah, get out, or you can just hold, like sell half, hold half, and wait for it to see if it can get up to like the 30s or something up here in this area before this, yeah, this break. So if you go from 3 to 30, man, that's a 10xer right there, and that's without options. See, so it has some potential, risky, but at this price, maybe worth it. So maybe we can look at it again. Okay, that's enough for China. Let's look at Intel. Intel. A lot of people were asking me about Intel, and I said, don't buy. I mean, if you buy, just buy a little bit, but don't really save your powder. It's most likely going to go lower as long as we have this weaker momentum here. So let's look at this. So I put these two red areas from supports from 2011, 2012, and another resistance from October 2022 to February 2023. So this area is going to be important, critical, and I'm not sure if the market, is really going to crash later on near elections, but just in case it does, I said tentatively 13.5 would be a big buy area for me. If that doesn't happen, what I expect is that it's going to go sideways, bounce up and down here for the next couple weeks at least. So the next time it hits 19, maybe you have to buy it then, because if I don't see anything particularly interesting about the stock market near elections, I don't think it will go to 13 then. Probably there's no panic. But again, we won't know. We won't know the future. I think I can show what I mean more clearly by doing this. Let's see. Because I'm going to tell you about seasonality now. I think you'll understand more when I show you this. Okay, let's see. Is that it? I have so many tabs. Let me see. Which one is it? Okay, I found it. All right, here it is. Okay, I'm going to share this. Hopefully StreamYards doesn't crap out on me. All right. So, election year seasonal pattern from 1949 to 2023. So the black line is major S&P 500 moves for all election years. So if you combine them into a composite, you'll see that usually the S&P 500 hits a peak at September, drops into October, late October, before finally rising into November. Okay, that's the general pattern. Now, if you see a big dip in April and May, then usually it just flies up pretty nicely up here. So in October, you don't see much of a dip, you just see more of a sideways. Now, is it possible we're going to see that? Because remember, our April and May looks kind of like that. So let me put back the chart here. Okay. So let's just look at the S&P 500. Okay. Now, you can see here, let's see. Ah, yes. Yes, July, April. See that? So April, we had a dip into, and then we got out in May. So we did have a dip in April. We're sort of doing what it says because we made a new high in September, right? So it looks pretty fair so far. So maybe we won't have a severe correction into October. Maybe we'll go sideways as that other chart alludes to. No guarantee though. No guarantee. So let's go back to that article. Let's see what it says. Now, Jeffrey Hirsch, he's pretty popular. All right. His dad made the Stock Traders Almanac. So they do a lot of this kind of seasonal analysis that you see here. Okay, 2024's great start was the third best election year, Q1, quarter one, since 1950. Looks like we're tracking top Q1 election years, more pronounced April to May dip. Chop continues in July and August, and these years have marked time until the election in November, gaining about 2.5% on from April to October. Regardless of the election outcome, S&P 500 suffered only 2 losses in the last 7 months of election years since 1950, 2000, and 2008. So as you can see, they don't care who becomes president, at least in the first few months. The market just gets happy that someone was decided. Unless there's like some recount nonsense or people start contesting who wins. That's not going to be good. Stock market does not like not knowing who wins. As long as they know who wins, they'll figure it out and buy and sell stocks accordingly to every sector. So if you're Trump, you're probably going to favor more industrials and things like that at the beginning. So a lot of oil companies, natural gas companies will get a boost from that at the beginning. But either one, I think, will not affect tech companies. So we remember, as I said, XLK is about 37%, or not 37. Was it 13? Oh man, I forgot again. All right, let me look it up. I keep forgetting. Look it up. Let's look it up together, guys. I don't want to say something stupid now. Here we go. Okay, here's your sectors. XLU is this. Let's see. XLK, 31%. Okay, 31%, not 37. I was about to say something stupid, but 31%. Now, someone in chat talked about Rosh Hashanah. Let's look it up. Let's look it up, guys. What is that? What do you mean by that? Someone here knows the game. Let me zoom in. Make sure you guys see it. I gotta get more organized. Got like a billion tabs open and stuff. Okay. Yep, you guys see it. Sell on Rosh Hashanah, but wait until the end of Sukkot to buy. Oh, right. Supposedly, Bernard Baruch once sold out on Rosh Hashanah out of deference to his mother and avoided a huge market decline during the high holy days. Okay, let's see. Perhaps it's Talmudic wisdom, but selling stocks before the 8 day span of high holidays has avoided many declines, especially during uncertain times. Jeff Hirsch, right, of the Stock Traders Almanac, who I mentioned briefly to tell you about the seasonality during election times. The old axiom on Wall Street says that investors should sell on Rosh Hashanah and buy on Yom Kippur. It appears to be based on the view in the Jewish religion that Jews should be free as possible during this 10-day period of reflection and self appraisal of the distraction of worldly goods. Supposedly, Bernard Baruch once sold out on Rosh Hashanah, right? We already read that. Out of deference to his mother and avoided a huge market decline during the high holy days. Based on the analysis of the Stock Traders Almanac, Jeff Hirsch, there seems to be some truth in that phrase. Here is Jeff's data from 1971 to 2018, which indicates that, in fact, there is a statistical validity to the adage. With the Dow Jones Industrial Average losing, on average, about negative 0.5% between Rosh Hashanah and Yom Kippur, and with 22 years of advancing stocks and 26 stocks declining. Okay, that's okay, declining stocks and 26 declining stocks. All right. Anyway, so you can look at the data right here. So on average, yes, it's about negative 0.5%, median negative 0.4%. So up 22 numbers of times that was down 26. So, okay, there's some statistical evidence of this, but doesn't look very major, right? I'm on board with Bernard Baruch and Jeff Hirsch, but with a little modification to the adage of sell on Rosh Hashanah and buy Yom Kippur, I prefer sell on Rosh Hashanah and buy at the end of Sukkot. After all, if reason, my Earth sign market analysis and all else fails, why not? Today is September 28th. Rosh Hashanah starts on September 29th and ends on October 1st. Yom Kippur starts on October 8th and ends on October 9th. Selling on Rosh Hashanah and buying on Yom Kippur may not work this year. In the face of the pressures of this week's technical break in the averages, the global economic headwinds, and the ongoing political drama, we just might need a bit more time. Maybe another week and a half or so beyond the end of Yom Kippur. Fortunately, we Jews have another holiday that follows Yom Kippur, Sukkot. What might work over the remainder of 2019 is selling on the first day of Rosh Hashanah and buying on the last day of Sukkot, called Rosh Hashanah Rabbah. At least that was what Citigroup Tobias Lekhovich told me a few years ago. Sukkot begins on Sunday evening, October 13th, and ends on Sunday evening, October 20th. Sukkot is the holiday in the Jewish religion that commemorates the 40 years of Jews wandering in the desert after the giving of the Torah atop Mount Sinai. The holiday is celebrated 5 days after Yom Kippur and is the only Jewish festival associated with an explicit commandment to rejoice in the bounty of the earth during the fall harvest. The bounty of a fall harvest may lie ahead, but from lower levels, and we need more time than until Yom Kippur. So let's make it Sukkot. All right, that's interesting. So this was about the article written around 2018 to 2019, right? So that's the year he was alluding to. I think it applies quite well here. 2018 to 2019 was quite a volatile time in the markets. We had trade war, we had quantitative tightening, into the end of 2018. Yeah, we have a lot of things, and then this was just a prelude before um, COVID-19, right? So anyway, let's go back to something I was talking about earlier. Um, Ratios. Let's look at the ratios again. So the ratios are a secondary indicator. And one of them I used for an example was XLK to SPY. Since the XLK is 31% of the SPY, you would think you need this sector to be quite strong for it to push the SPY a lot further, right? That's the theory. Now, let's go back to COVID. And I told you guys that this indicator was pretty bad at telling you to sell before COVID. In fact, it more than just told you to buy more tech companies, even through the dumping of COVID. So when you see this ratio up here with the candles is the ratio, the straight line here is just the S&P 500. You see that they were, since 2018, continually accumulating tech companies. Even you had these jagged moves during Trump, trade war, tariffs type stuff here. This drop was due to Jerome Powell over tightening and quantitative tightening and the bond market freaking out, completely freaking out in October. Yeah. I forgot what caused this effect here. It could have been something to do with Europe, maybe. I forget. But in any case, you see, for the most part, from 2018 to like the fall of 2020, tech companies were bought. So it's as if people, even during this panic of March 2020, during COVID, people were still buying, or at least they were selling less tech companies than were dumping the other companies. So this ratio tells me that there was a lot of strength in how technology was performing. It doesn't tell me that, both of them, like, okay, tech company was always going up and the S&P was going down. Incorrect, right? I can just look at the QQQ, and obviously the Nasdaq was dropping the same as the S&P 500. But what it does tell me, though, is that subtly, I guess, a hidden undercurrent, that people were accumulating, or at least they weren't selling a lot of tech stocks while that was dumping. So there was a fingerprint here. There was a clue here that perhaps they knew COVID was coming, people were going to get locked down, and that it was a good time to buy all that trash. Zoom, freaking Robinhood, any kind of trash tech company was in the XLK. Any of them, anything that you needed while you were locked down, right? Amazon, especially. It's just they knew probably, and that's why it's a fingerprint. Now, since this thing couldn't tell me there's a crash, that's why I said you had to look at other indicators. Okay, so we looked at XLY over XLP, so discretionary over staples. This wasn't a very good one. It didn't tell me anything. It just followed it. Semiconductors, however, did slightly better. It gave me a clue, at least here. There was a big drop in the ratio of semiconductors to the rest of the NASDAQ. So there was some kind of hint that there was going to be a supply chain issue. So somebody knew that, supply chain problem, better get out. So that's the opposite. Tech XLK has all the semiconductors, but it also has software too. So as a group, technology went up. So when you look at these secondary indicators, you can't rely on one. You have to try to tease out what the narrative is in the future by looking at multiple ratios and trying to understand what exactly is happening. This is very difficult, I think, but it's worthwhile to try to do. Um, and I think, even I have to get better at it. I think this is why I'll recommend Samantha LeDuc. Samantha LeDuc is the best. She is the best at doing this. I've talked about her to recommended her to Master Kim. I think the problem is that she charges you a lot of money per month for her services, and I'm not charging you anything for giving you this information here. But I think she has a big team of people. She does everything like swing trading, day trading, investing, all types of customers. She has a products for each type, and she has young kids doing the crypto trading too. So if you want to do crypto trading, she has a package for you too. She has a Discord. But the thing is, yeah, it's going to cost you. Now, is it worth it? That's always been my question. I think a lot of this stuff you can learn on your own if you spend some time. But it's going to be painful, right? You see that it takes a lot of time for me to express all this information to you guys and for you to try to understand it. And that's why a lot of people, they rather say like, oh, this is too much. I'd rather just pay someone to tell me what to buy, what to sell. I mean, you can do that, but I feel like it's better to try to control as much of your financial destiny as possible. If you rely on someone too much, it's like, yeah, you yeah, it's gonna be tough. It's gonna be tough. So I'll send you her YouTube uh, link here. So if you are interested, you can watch some of her content to get an idea of what she sells. Um, yep, Leduc Trading. So you can see what's up. I mean, some of you guys might have money to pay every month for an advisor like this, and I think Master Kim said like, yeah, he was thinking of like getting his friend. I think it was Sam Watkins. I think that's his name. Like, I mean, he's wealthy, so might as well try it out. I don't think he has time to be learning stocks and stuff. At this level, it's better to um, give someone like that just to pay, just to get an advisor. So, like I said, everyone has their own level. If you're willing to try to learn this yourself, I think it's worthwhile. But if it's better for you to follow other people, you got Dennison for options. Maybe CKJ3 will start a Discord himself and teach you futures trading, or you can pay for a package with Samantha and get the real deal type of pro advice. But her style of analyzing the markets is pretty much like mine's, looking at ratios, trying to figure out if there is an intermarket relationship between things. And from there, you can figure out where the market is going. Now, I will tell you another thing. So, outside secondary indicators using ratios, you can use something called margin. So let me try to figure out how to explain this to you. I think we'll have to define what a margin is first. So let me try to see if I can get a good. Yeah, let's just discuss margin first. I think it's better. It's better to give you guys an intro on that before we discuss margin in because we can use it to find a secondary indicator with margins. Okay, guys. So let's go. What is margin? In finance, the margin is the collateral that an investor has to deposit with their broker or exchange to cover the credit risk the holder poses for the broker or the exchange. All right. That's a pretty wordy definition. Now, I can tell you this. Let's say you have $10,000 in your brokerage account, right? I theoretically want my brokerage account to be, let's say, 20,000. So if I'm doing that, I'm borrowing money from my broker to theoretically buy $20,000 worth of securities with only a collateral of 10,000. All right. So that's what it is. Buying on margin occurs when an investor buys an asset by borrowing the balance from a broker. Buying on margin refers to the initial payment made to the broker for the asset. The investor uses the marginal securities in their brokerage account as collateral. In a general business context, the margin is the difference between a product or service's selling price and the cost of production, or the ratio of profit to revenue. Margin can also refer to the portion of the interest rate on an adjustable rate mortgage added to an adjustment index rate. Okay. So in any case, let's look at the key points here. Margin is the money borrowed from a broker to purchase an investment, and is the difference between the total value of an investment and the loan amount. All right. Okay. Margin trading refers to the practice of using borrowed funds from a broker to trade a financial asset, which forms the collateral for the loan from the broker. A margin account is a standard brokerage account in which an investor is allowed to use current cash or securities in their account as collateral for a loan. Leverage conferred by margin will tend to amplify both gains and losses. In the event of a loss, a margin call may require your broker to liquidate securities without prior consent. All right. So these are the keys here. I'm not going to go any further than this, because we can go now to the margin statistics. All right. This is the key now, guys. Margin statistics. Let's see. Let's see what history we have here. Look at that. August 23. So 2023. Debit balances in customers' securities margins account. So it's about 689, I guess. Oh, in millions. So that's like billions, right? So 689 billion. All right. It's going down a little bit. Going back up. Oh, now we're over 700. All right, 742, 784. Oh, now we're at 800. So you see here, when the stock market is going up, people are getting more and more greedy. They're like, give me more margin. Give me more margin. I'll just buy more Nvidia with your borrowed money. Now, this is what makes a bubble. This is what makes a bubble up. People don't need real money, and they'll just buy stocks with it, with someone else's money. Okay. So with this information, I can get another secondary indicator. All right, guys. This indicator is pretty useful in predicting a crash. Because I think this is more has more predictive value than all these ratios I've been showing you since this afternoon. Let me find it. I'm not organized. Okay, I'm a very disorganized person. Let me get it. It's over here in this folder somewhere. I had to use a spreadsheet to make this one. All right, here we go. Now let me share the screen. Okay, this is a big boy. Let me zoom in. Let me try this. Let me try to zoom in for you guys. So let's see what this is trying to say here. Because I've shown this before on John's channel, but I think I'll have to like explain this over and over again, because this is not easy to understand. And I wish I had a better resolution image where I took a screenshot of this from somewhere, who knows where. Falling margin debt growth from high levels triggers a sell. So when you saw that FINRA data that I showed you earlier, so it's public data, but it's delayed, okay? That data is like always a month later or 2 months later, and it's always ancient. But we can still use it. We can still use it because we can look at the rate of change. Okay, guys, the rate of change. If you see that margin debt decreasing from a month to another month to another month, it kind of tells you that the rich boys who have tons of margin are saying, hey, I think the stock market's going to crash, so I'm pulling out my money. I'm not going to put it in margin anymore, okay? Because when you have a crash and you're in a margin account, oh boy, you're going to get a ton of phone calls that afternoon going like, bruh, you better put up your house now because we're calling that margin. Where's your house at? So yeah, they're gonna take all your mansions away and shit just to pay off that collateral, right? That you got to pay back. So having a high margin account during a crash is no bueno. It's fun when the stock market's going up. You're making money hand over fist. But it ain't fun when you're getting out. So I would assume a very wealthy person with a margin account isn't a dummy. They will have to sniff out when a crash is coming ahead of every other moron and get out of their margin. Everyone else has a small margin account, right? If you're just a brokey, you just got 10,000, you make it a $20,000 account. Yeah, see, that's nothing. I mean, if you get a call, then they're just probably gonna like rip you an asshole and say, hey, buddy, you got to pay that 20 to 30,000 now in collateral that you owe us. You'll have to find it somewhere. Sell your car, maybe repo your car, repo your TVs, your couch, anything in your house. But as far as that's concerned, that's not much. But a rich guy, they have to definitely be concerned about having such a high margin account. Anyway, let's go back here. Signals generated. All right. I put this highlighted in the cyan right here. Signals generated when indicator rises above negative 21% is a buy. But if falls below 48%, it's a sell. Okay, what does those percents mean? That percent is here. This is the 15-month rate of change. Okay, what's a rate of change? Rate of change is when you take this number here, whatever number that would be, and go 15 months back and subtract it. That's your rate of change. So if you start seeing the slope, so that's kind of like a stupid way of doing a slope. All right, if you took some algebra, you should know that it's just a slope. So you take a slope. If it starts decreasing, then you know something's up. Like here, this thing was decreasing right into COVID. I believe that's COVID. Yeah, something like that. So let's look at the present day. Let's just look at the present day. I rather look at the present day. Let's see, this was a sell signal here, 2021. Okay, 2021. I think this was before Jerome Powell really went aggressive on interest rates. So I think he announced it maybe Thanksgiving, because there was a huge crash in Thanksgiving, but that could have been because of the Omicron variant. I forget. All these things happened all at the same time. I forgot it was the Omicron variant of COVID, and then we had the interest rate increase. I think that all happened around, the same time. But in any case, you could see here, we had a huge amount of margin. I think this was 882 billion, right? That was the peak. Oh no, never mind. It went up to 900. Jesus. Yeah, people were just buying hand over fist. But the thing is that you start seeing this rate of change start decreasing. So I I think this is the problem here. You had this massive overrun. You went up to like 80, 60, and then you start decreasing because now, even though it's increasing, the rate of change from 15 months before, it starts dropping. So it's not increasing as rapidly. So even though we're going like $900 billion in margin, it starts dropping. So it's a bubble here. The margin itself is a bubble. And this was going ahead of the whole stock market. So now it dropped to 42.3, which is right here. That's what it said. 11/30/2021, 42.3. Now the sad part is this data probably came a month late, right? You probably got this data late in the December. If I had this data at the time it was made, I probably would have got out in November or even October. Even when you see this number, maybe I would have got out earlier. I probably would have said, "Oh well, you know, it's time to get out," as we're dropping from the peak. The peak was already made in June here in terms of the margin rate of change. Okay. So in any case, that's a sell signal. You would have avoided the whole Ukraine stuff. You would have avoided the whole crap here. Everyone freaking out all the way until June of 2023. June 2023, we finally got above 21%. Now, that's kind of bad because the actual bottom was made around October of 2022, I think. So it's not a good buy signal. Let's put it that way. But it's pretty good sell signal. So yeah, not every signal is always going to be perfect in calling tops and bottoms. But this is another example of a secondary indicator. You're using something outside of just looking at the price of a stock or price of an index. You're looking at some kind of hidden fingerprint that's left behind the crime scene. And you're trying to guess, hey, what do the rich guys know that I don't know? And why are they doing it? So I think that's how you got to do it, man. That's how you got to do it. There's so many, and I'm pretty sure there's tons of ideas that you guys can come up with, all kinds of ratios, all kinds of data that you can collect from the internet. It's all out there. The only problem is it's not real-time data, you know. Okay. What else? What else I have? Let's look at how much of the whole US market is now just tied into bonds. I'm going to look at that a bit. You know, I like using this website. This website's pretty damn good. IsabelNet. IsabelNet. I like IsabelNet. You can get a lot of quick images that that give a lot of info really quickly. I mean, they basically take it from bank research information, which you have to pay to get. So I think a lot of these guys just get it, screenshot it, and put it out here. But this one is from August 23rd, 2024. All money market funds total net assets. Investors currently hold 6.22 trillion in money market funds, a figure that is being interpreted as a contrarian bullishness, I guess, bullish signal, for the stock market. All right. So a lot of people, they've been hiding out in cash, because cash pays you 5% until recently. Now it's dropping. Okay, guys. So there's $6 trillion just hiding out in some high APY savings account or their brokerage account where they're just too lazy to buy a stock. They're saying, like, I don't trust this stock market. I'm not buying nothing. So There's a lot of ammo out there. There's a ton of ammo. Mm, 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 mm. I think if you look at this chart, it's pretty interesting. Like most people were not in money market funds until very recently since COVID. They started freaking out in COVID. Look at that. They hid out in bonds. Essentially, that's what it. That's what a money market fund is. Essentially, a short-term bond, which is basically a T-bill. And ever since they still love cash because it pays a lot of money. Now, let's look at the Treasury Direct auction. Let's see what bonds are paying nowadays. Let's look at the 20 most recent interest rates. So, investment rate is the yield you're going to get. So, T bills, 52 week is 1 year. 52 week for 1 year is about 3.946%. So, 1 year T bill is less than 4% now. A 4-week T bill is one of the shortest T bills you can get, is now 4.783. So, we're long away. We're far away from that 5% plus that we usually get. Now, when people start seeing these numbers drop and drop, they'll be like, man, I don't want 4%. I don't want 3.9%. What they're going to do? They're going to start looking at stocks. So I would say if Jerome Powell cuts twice again in November, it's going to look worse and worse for T-bills. And those guys who are all up here hiding out $6 trillion worth in money market funds, they want more money. They're just not going to be satisfied with 3.5% anymore. All right. So they're going to look at more riskier assets. Now, I know John was talking about risk premium. That's very interesting. Risk premium is a big thing in terms of bonds and stocks. The reason you buy a bond is because the risk premium is very low. Yeah, you only get 5%, but it's guaranteed. Stocks, not guaranteed. Yeah, you get 10% on a good year, but you could also be down 20% in a bad year, right? So the risk premium is higher for that. But if the interest rate for bonds keeps going lower and lower, people don't want them, right? Because the Fed is cutting rates, then people want risk because they want those gains. People are greedy. They are inherently greedy. And that's what you got to play. So you have to keep that in mind. So stocks may just go up only for the fact that people are inherently greedy. Yeah. And that's where liquidity comes in, right? That's why when I started talking about stocks, I always mention liquidity, because it has nothing to do with the value of the actual company in the end of the day. A lot of times, all it matters is just how much money is floating out there and where that money is trying to go. And you have to guess where that river is moving towards. That's all it has to be. So keep that in mind. All right. That's a good explanation for that. So I'm just going to go back to Wyckoff now. Let's review. So I started off with Chinese stocks. Let's see how Chinese stocks are doing now. Are they crashing? Are they not? Are they holding up? Let me see. I wasn't paying attention. Yeah, they're still doing fine. Yeah. So we'll have to see. We'll have to see how it goes tomorrow. It recovered. So when I started doing this, yeah, it started recovering a little bit, but it's still below the resistance. We'll have to see. If it's time to short tomorrow, I'll let you guys know. I have to be very convinced though. I don't like shorting. I don't like doing that. That's not me. I'm like Dennison and CKJ3. I don't like even Chinese stocks, which tend to crash better than most other markets. Still, I wouldn't risk it. I wouldn't risk it. I don't like shorting. That's just not my nature. But if I see a good candle, I'll let you know. You guys who want to take that risk. Okay, let me get that. Yeah, you see that? It recovered right after I started talking. Blah blah blah. It starts recovering. But these three red bars here are pretty significant for a 10-minute chart. Now, it doesn't mean anything though. It's a 10-minute chart. I'm not looking at a daily chart. When you look at a daily chart, it looks fine to me. Nothing wrong. So it has to make a significant break for me to discount that daily candle. So the next candle, the next day's candle, it better overwhelm most of this move right here. So the US market took it to about this level here, 21,500. And I think from there, first it opened at a lower opening, but it it just took it way far right now. So I think in pre-market it should be quite high, but I would definitely be considering shorting it in the coming days. I'll have to see. I need more proof. I need more proof it wants to die. That's not enough proof for me. I can't say that's enough proof. Now let's go look at our other favorite stock, Zim. Zim. So a lot of people were pumping it ahead of the East Coast strike with the longshoremen. So this is a West Coast shipping company. It dropped. I bought it around 24, around here. I like how it's doing because if you look at the way it's building its cause here, it was already set to go up. It has two good things going for it, right? You got the Chinese stimulating. You also have the US economy not crapping out. So you have demand on the Chinese side, you have demand on the US side. So the US wants to buy crap from China, China wants to buy crap from the US. So there you go. We have good trade. Now, this could all be wiped out in an instant if Trump gets elected and starts doing tariffs and all this trade war talk. Yeah, okay, this stock ain't going nowhere. But just from a chart perspective, it looks very nice. Very nice. Very nice. And I'll show you a technique to figure out what price it potentially can go to. What's the potential price it can go to? Now, this is an ancient technique. It's called point and figure charting. All right. So I'm going to introduce you to something, but I'm not going to do a good explanation of it. I think a lot of other people have done better explanations of point and figure charts. But what I will show you is kind of a taste of what can be done with ancient charting techniques. This is what people did back in the old days before computers. All right. This is not ancient Chinese techniques. All right, HB. No. It's not that ancient. I mean, candlesticks probably are more ancient than that. The rice traders from Japan were doing candlesticks, but it looks like tic-tac-toe. All right, guys, it looks like tic-tac-toe. I mean, this is what happens when you don't have a computer. Okay, so people couldn't draw like bar charts or candlesticks like in real time. What they did was they did this. And I'm not going to tell you how to construct this thing because I don't have time for it. But what I will tell you is that when you have a graphing paper, and then you can start all these price the reason why you have these prices up here is because I set it to the box size. So let me zoom in. Let me zoom in. Let me zoom in. Let me zoom in. I mean, like this font is so small. So you see this box size. So each box size is 1.24. Now why did I pick 1.24? I'm not gonna tell you. Because I said ATR. I set the ATR to 20. ATR 20 is basically the average true range is 20. So it's like it took the average range, the dynamic range of this stock, and it decided that 1.24 is the optimal. Now, this is not how they did it in the old days. The real ancient days, they were so brokey that they set it to like one. They just set it to $1. It was back when stock prices, were confined to a certain level. Most stocks were like easy to digest. I mean, this is why the Dow Jones works the way it does. The Dow Jones requires all stocks to be below a certain number. They keep everything within a range. That's why you have the term penny stock. If you had a shit stock, it was always below $1. But nowadays, you can have tons of crappy stocks that go up to $5, $10, but they're crap. The way they move, they're penny stocks. They're just penny stocks too. So this was the old days. The old days when everything could be determined by simple pricing. And let me just zoom back out. I don't want to go further than that. That's too much knowledge for you guys right now tonight. I think the most you can understand is when you look at this chart, compare this to a bar or candlestick chart. It looks very plain, right? Actually, you can tell very quickly where there's some kind of accumulation or there's an uptrend and downtrend violent. And you see the numbers here 7, 8, 9, C, 2, 5, 4, whatever. What that is are the months. Those are the months. So one is January, okay, all the way up to October. October is the 10th month, which is why it's called A. Instead of 10, they use A. All right. 10 B, C is 10, 11, 12. So 12 is C is basically December and B is basically November. All right. So if you know hexadecimal, you kind of see where that comes from, but I'm not going to go there right now. All you have to really understand is that all the price action can be compressed in this type of manner. You see here this column for 23 and this column to 24. Most of the price action for 2023 for this stock, ZIM, ZIM, is all done within 2 to 3 columns very quickly, right? It's all done there. So most of that price action is very compressed, very compressed. So that means you can tell in 2023, all the stock did was go down, 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 down. Only in 2024 did we start seeing something different. So for the most part, 2022 was like moving up and moving down. 2023 is all saying it's just going down, all the way down. Now, the interesting about 2024, you see this square pattern here. What that tells me is that it's making an accumulation potentially. All right, because it was confirmed last week to this week. We see this huge row of X's or column of X's, I mean. The X's are moving up. So now we've broken out of this box. This box contains 5 columns. 1, 2, 3, 4, 5. So I have 5 columns. I set it to 3 boxes because here, I'm zooming in back in. The way this graph paper is set up is 3 reversal. 3 reversal. I'm not going to get into it right now, but I'm just going to say 3 box reversal. All right. I set it also to 1.24 points. Box size is 1.24 points. So I take 5, I multiply it by 3, I multiply it by 1.24, I get 18.6 points. All right. Now, what does that tell me? When you look at this box, the bottom range of this box is at 16.12. The top of this box is around 22.32. If I add 18.6 to this, actually, I think I made a mistake probably because I probably added it from, yeah, I probably added from 23.56. Okay, I made a little mistake. I was being aggressive and set it to add from here, but let's say 18.6. All right, add to 16.12. You get around here to the 34.72 mark, and the 18.6 added to the 23.56. Right, or maybe I didn't do that right, but let's say whatever, 42.56. Let me double check. Let me double check for you guys. I did my math right. 22.32. Yeah, I don't think I did my math right on that one. Yeah, it was supposed to be 42.16. Yeah, there we go. I saw that right away. So 42.16, I did my math wrong there. It's not too far away. It doesn't matter. I'm just giving you a rough estimate. And 16.12. Okay, let me double check. Yeah, that's right. It's 34.72. But in any case, so it's around 42 and it's around 35. So this boxed area here gives you the upper and lower limit of where I think potentially Zim is going to go. So if everything works out, we're going to eventually hit these two within this box around here. So this is about 50% gain. So if I bought it at 24, that's about 50% gain near 35 and 75% if I go to 42. All right. So between a 50 to 75% gain when I buy it at 24. So for all you guys wondering, yeah, Ava asked me what my prediction was for the price. Okay, that's your prediction. That's your prediction. So if you bought it at 24, this is where you potentially can go. Okay. All right. Now, I am going to tell you where to look up how to do point and figure charts. This dude explains it way better than I could ever, so I'm not going to repeat what he already does. Because I could just show you his YouTube like content. Point and figure. Okay. Here, I'll give you the link. Go to stock charts. All right, go to stock charts. Now, and go search point and figure. So use this link. Go to stock charts TV. So that's the YouTube channel and search point and figure. And you should come up with a list. And I'll show you that list right here. And if you really are interested in what point and figure is, you should go see his videos. That really is how you should do it. Yeah, right here. You see that? So the first, I wish they just had a playlist and just, I don't know if the playlist actually like organized it to the point where you go to point and figure, but you see this Wyckoff point and figure workshop part 1. So anything with Bruce Frazier, go and look at. You don't need to look at these other guys point and figures. Just look for his face. Bruce Frazier, man, old white guy. Go look at his videos. Like, he's the expert. Like, I've never seen anyone use it so well like he does. So this is an ancient technique barely anybody uses anymore, but I swear to God, man, you use his point and figure stuff, You just get amazed. You're like, wow, how did you know the price was going to go to that level? Like, shit. You just use the point and figure method. It just hits right away. You're just like, damn, the gold hit $5,000 an ounce. How did you figure that out? It just blows my mind every time I see this dude do it. He's probably the expert, the master. So I showed you Samantha LeDuc. She does all the ratio stuff better than me. This dude, he can do all the point and figure stuff better than me. Now, if I could just, master it to that level, like these two people, man, I just be investing God. I wouldn't need to do anything else. I could just figure out exactly what I got to invest in all the time with accuracy. So I'm just telling you this because there are people there with such level of skill that if you just didn't know about it, you would be thinking like, is it even possible to predict things that well? Yeah, it can be. If you spend a lot of time and effort into it, yeah, you can. But I'm lazy. That's just not how I feel like doing things, because I made a lot of my money just investing. I don't need to be doing all this extra work, and a lot of times I would say I just got lucky. I just picked the right companies at the right time when I did. Only recently, I see all these people working hard trying to find dozens of stocks, looking through everything, trying to figure things out. Now, I'll show you this. Martin Shkreli has been doing tons of live streams recently. So Martin Shkreli, he doesn't do charts. Okay, he does fundamental investing. So he's going to look through all the accounting. He's going to look through all the 10Ks. Like he's doing the legwork here. He's doing everything the hard way, right? He's trying to do it with just understanding the fundamentals of a company, which requires you to work really hard and figure things out. And what I'm trying to tell you guys is that many of you are not that autistic. And I think even if you were, how many of those people who are autistic love to look at financial statements day in, day out? It's really boring work. And how many of those stocks are going to be like going up 10 times, 30 times, 50 times? I feel like it's just you're doing a lot of work, but I rather work smarter than harder. Let's put it that way. Okay. And I feel like if you really master technical analysis, you can work smarter than harder. But the question is, can you figure out what the big boys are thinking? And that's what this channel, I'm trying to contribute to this channel, all that stuff. Because if I could use point and figures and charts and just look and I say like, I gotcha. This dude, this rich person is going to buy it. Yeah, I'm talking about Farmer Boy. Yeah, he has tons of good info. Like, yeah, go to his channel. He's tons of stuff, tons of good info. But the problem is you got to be really autistic. So here, Martin Shkreli, go there. See, Martin Shkreli, right? Yeah, there he is. Right there. Martin Shkreli. Yeah, real Martin Shkreli. Shkreli. Right there. You see it on the screen? Yeah, go to his channel. No problem. Tons. Dude, he was streaming for crazy. He's going crazy streaming. Stocks, round 2, stocks, round 3. Happy fourth quarter, part 2, happy fourth quarter, part 3. He's going nuts. So he's analyzing stocks, from the ground up. So he's all about looking at the financial statements, everything. Like, I can't share the audio, but you can see that he's spending 8 hours on one live stream, like looking at everything. And he's even like, Like he's even looking at like how this pharma company like does his drugs. Like he's like dissecting. Like look at this dude, man. He's going through the chemistry. All right. So I'm not gonna go through that. I don't think anybody has the time or patience to even figure that shit out. I'm just telling you, if you just look at a chart, I think the big boys who are investing know what's up. You just follow the big boys. You just follow the whales. I have no interest in figuring out if your new drug actually works by going through the chemistry, going through the fundamentals of your business, or like how much revenue are you spending on HR department, or how much you're spending on the sales department. Nah, I don't got fucking time for this shit, man. Come on, really? Nah. I just want to look at the chart and figure this stuff out. But hey, more power to him. I like that he actually spends time looking at everything, and he actually has his own Bloomberg terminal type of thing. I forgot what it's called. Um, let me see. Geo, fuck, what is it called? Oh man, I have it bookmarked somewhere. Martin Shkreli. Bruh, what's it called? Ugh, man, I hate it when I don't remember. I think if you go through his live stream, you can figure it out. God damn it, I don't know what it's called. Let's see. Yeah, 720p. I can't even read his stuff though. Good lord, huh? Oh my man, I can't even read that. I think it's Godel. Godl. Let me find it. Godl. Let me see. Oh, here we go. Here we go. So you can use this to do your research. Martin Shkreli's little baby ear. Let me put it up. Hope it doesn't crash my damn computer. There you go. See that? Yeah, if you're autistic, hey, you gotta love this. Command line Godel terminal is a command line interface system. You can access the terminal by clicking the enter the ticker prompt on the upper left or by pressing the backtick on your keyboard. You will use the terminal to enter commands, which provide access to all of Godel's features. Below is the syntax for a command. Between each statement is a space, or you can press tab to auto-select the highlight. Oh, Jesus Christ. All right, let me do this. All right, let me see. All right, let me see if I'm a retard or not. Let's look at Apple. EQ. Okay, G. All right, let's go. Ooh, how cool is that? I got a chart. Oh man, did it crash my computer? Oh, I hope God, please no. With StreamYards and this shit running. Oh yeah, this is great. Great stuff. But hey, yeah, it's pretty cool. I gotta admit, hey man, more power to you. You're smarter than me, bruh. You're younger than me, bruh. I'm old and lazy. I just don't give a fuck about getting $1 billion if that means me trying to figure out how to use your damn terminal. But hey, that's pretty nice. I gotta admit. Now, let me see what else it can do. Let me see what else you can do. Asset class, man. Oh man, keystrokes. What else can I do? Can I do chat? Oh, I can chat with people about a stock. Let's see. Probably maybe people are talking about Tesla. Chat. Can I do chat? Does that work? No, it doesn't work. God damn it. Oh my god. News. Can I do news? No, it doesn't work. Man, do I have to put EQ in front of everything? Oh Come on, can I do chat? No? News? No? Good lord. Well, okay, let's do this. Fundamental analysis. Let's do that. Yeah, I got Tesla right. Why the heck I can't do that? Okay, I do EQ. Q, right? Does that work? It didn't work? Oh boy. Man, I must be a retard then. I can't even use this thing right. Okay, I did G. I mean, Tesla's ticker. Come on, it was right. EQ, yeah. But why didn't? Oh, that's weird. I don't know why it works now. It didn't work then. All right, fine, whatever. But I'm really interested in the chat room. Come on, give me chat. Can I talk to people? No, guess not. Let's look at institutional owners of the company. So Vanguard owns 47 billion of Tesla, BlackRock 37.6 billion, Susquehanna 15.9. See, that's not bad. I mean, this is pretty neat. This is really kind of like a Bloomberg terminal type of thing going on here. Now, another one is OpenBB. So OpenBB is another type of Bloomberg terminal type of thing. I mean, it started during COVID. It's kind of grown really big now, though. So I mean, if you start using it, you be prepared to pay money because everything's paywalled. Anything good is going to be paywalled, Yeah, that's just how it goes. But it's not bad. Yeah, that's pretty good. You get the fundamental analysis here. You get the operating revenue, total cost of revenue, operating costs. So yeah, if you're a big fundamentals guy, probably Martin Shkreli's little thing, as long as it's free, ain't bad at all. Not bad. Didn't he raise the price of AIDS meds like by thousands of dollars? I don't know if it was AIDS meds. The problem was it's like he didn't give a fuck because he knew that insurance companies paid for it. He knew the system. A lot of these like drug companies, they know that the patient actually doesn't pay. He doesn't give a fuck. So he just like playing the system. Now the problem is though, he started talking too much shit. Once you start saying too many things that other people are doing, the big boys are doing, you gotta be shut down. So he wasn't doing anything that was obscene compared to what other people are doing. If you want to look at another company, you could look at Mallinckrodt. Mallinckrodt, once they bought what was essentially a drug derived from pig cartilage, or I don't know what the fuck it was derived from. Yeah, the Mallinckrodt. Let me see. Mallinckrodt went bankrupt for opioids, but what they did was most of the reason they made a lot of money at one point was because they used refined pig brain or some shit like that. Mallinckrodt. Oh, yeah, what the heck? Mallinckrodt pig. Let me look at pig. Yeah, here we go. I'll show you this. Blah blah blah. Yada yada. Where's the pigs? There we are. Here we are. It's called Acthar. All right. So Shkreli didn't do anything that was different from what other drug companies were doing. The only problem was, he was kind of calling people out, and guess what? You shouldn't be doing that, bro. You call what other people are doing out, they're gonna fuck you up. Here you go. Expensive drug driving up Medicare expenditures without evidence of greater efficacy. Medicare spent more than $1 billion over a 5-year period and more than $500 million in 2015 alone on a high-priced drug that has not proved more effective than much less expensive corticosteroids. Hmm. Researchers at OHSU in Portland, Oregon, and OHSU Oregon State University College of Pharmacy report their analysis also indicates that a comparatively small group of frequent prescribers combined to write prescriptions that lead to the bulk of Medicare's expenditures on the drug HP Acthar gel. Okay, HP Acthar gel was Mallinckrodt. I had that stock at one point. It was going up and up and up off of this dumb drug, Acthar gel. And I got out of it before it started going down because it had some issues with opioids. So you know what? These drug companies, they doing you dirty. But hey, blame Martin Shkreli, some young punk kid. He ain't doing nothing that these fuckers didn't do. Acthar is primarily used to treat rare epileptic spasms in children younger than 2. It has a complex molecular structure and is classified as a biologic. It is derived from the pituitary gland of slaughtered pigs. In recent years, it has been heavily marketed as a treatment for other conditions, including multiple sclerosis and other autoimmune disorders. The new study focuses on frequent prescribers among neurologists, rheumatologists, and nephrologists. Originally approved for clinical use in the 1950s, the medication has shot up in price in recent years. The average price per vial has increased from $748 in 2001 to $36,000 today. And treating one patient with a short course of Acthar can cost more than $100,000. The cost of a course of treatment with prednisone, I think it's prednisone, right? Or similar steroids would be at most a few $100s. Well, look at that. Look at that, guys. You want to blame the Pharma Bro? Pharma Bro was just one dude who was playing the game. What was he doing? But playing the game that other big boys have been doing for years. Makes you think. Makes you think. Anyway. Yeah. But yeah, I made money off of that stock. All right. Sue me. Blame Obamacare. It doesn't matter. I think all people need to understand that, a lot of drugs have been developed from the States. We give them to other countries who don't have to subsidize those research costs. But there are gougers. There are companies that are unscrupulous. They will send salespeople to doctors to sell you drugs that, probably shouldn't be that pricey, and that causes inefficiency. So I can't tell you what the solution is. All the other countries would say like, oh, socialize everything. Well, there's a reason why all the other countries are socialized, because we develop the drugs in a capitalist system, and then we give you the drugs after it's been genericized. So it's not an easy answer, I would say. You need the private market to give people a motive, a profit motive. People are not going to make drugs because of their bleeding heart. Let's be real. If I'm fucking working my ass off in a lab, I better be making some big bucks, because I'm sitting there using a fucking test tube and a pipette and dropping like samples left and right. Come on, guys. Seriously? That company wants money. The workers want money. People are not working there because they feel like Mother Teresa. Yeah. So I don't know how to solve these problems. It's a human problem in general. And I think you have to put some curbs I think on these sales folks, a lot of these pharma salespeople are pretty much devious as hell. They're just going around trying to sell drugs that people don't need, making the doctors try to like, because the doctors, you already seen it. Portia already like showed you, right? Like Portia could do that statistical problem, no sweat. A lot of those doctors couldn't even figure out. I got 1,000 of actual people that have a virus, and it's a 5% efficacy of the test. What is the actual percentage where I detect the virus? Man, they couldn't even figure that shit out. Come on, you think they're gonna withstand like some sales person from a pharma company coming in their office going like, hey, sell this Actar gel. Come on, this Actar gel made out of pig brain. Can you believe that? Yeah, pig brains. Yeah, that's definitely haram, right? That's definitely haram. I don't think you could give that to a Muslim. But still, you could charge up to 30 G's for it. Seriously? Oh man, I could mash up pig brain for you and give you a drug for like 2 cents. Come on. Are you serious? It's insanity, man. It's insanity. Uh, anyway, yeah, that's going off topic now, but yeah, go to Martin Shkreli. Check his stuff out. I think a lot of you guys that are interested in fundamental analysis, you should definitely check his streams. Let me go back. He had a lot of recent streams, and if you have the time and the patience, you might learn a thing or two from him. But from my point of view, I'm a chart guy. I like charts. That's how I do things. I think doing all this fundamental analysis is a lot of work for a few rewards, but he is a drug aficionado, so maybe if you're interested in pharmaceuticals, you can look at his live streams and maybe you'll find some winners. Pharmaceutical companies, very risky, but they have high reward if you pick the right ones. So I think, if you got time, check it out. Check it out. Let's see, other things to talk about. Let's do a review before we leave. Let's do a review. Yeah, we should do a review of the white cough method. Okay, guys, let's go back. Say settings, all right. Let's go back. Let's go back. Let's go to the review. Let's go back here. We talked about accumulation. Okay. And I used the Hang Sang. All right. To give you an example of an accumulation in progress. We haven't finished the accumulation. We don't know. We're in phase D right now. We've gone up, but I'm still waiting for the final range here, this cause, before we get to phase E. Once we get to phase E, then I can be certain that it's time to really buy into Chinese stocks. I'll do it. But before then, I'm not buying it when it's already ran up like 50, 60, 70%. No way. Come on. Give me some proof. Prove to me you're going to keep going up. So let's review the little things in this chart. PS is preliminary support, where substantial buying begins to provide pronounced support after a prolonged down move. Volume increases and price spread widens, signaling the down move may be approaching its end. All right, that's the first one. Selling climax, the point at which widening spread and selling pressure usually climaxes as heavy or panicky selling by the public is being absorbed by larger professional interests at or near the bottom, right? Near bottom. Often price will close well off the low in an SC selling climax, reflecting the buying by these large interests. Okay. Automatic rally, AR, which occurs because intense selling pressure has greatly diminished. A wave of buying easily pushes price up. This is further fueled by short covering. The high of this rally will help define the upper boundary of an accumulation TR. TR is trading range. Okay, so I was asked earlier by Momo, how do you figure out the resistance? How do you find the support? It's all by experience mostly, you know. And you just stare at candles but candles is one thing. The thing is like you are actually trying to look for this type of pattern here. When you see something move down very quickly and then start reacting very strongly back up, it doesn't mean it's just like stocks don't move like that. It's not going to be a V shape. You just can't like bounce and then bounce back up all the way back. No, you got to create a trading range first before you leave it. And that might take months. Maybe it takes a week. Hell, it'll take years even. So you don't know. That's why you should be paying attention and looking at charts and figuring out, hey, is this going to be a quick flip? Is this going to be something that will last me a year or more? That will determine if it's like a swing trade, it's an investment, maybe it's a day trade. All this is fractal. Everything you see here could be like something that lasts a month, a week, a day, maybe even minutes or seconds. They'll look like this. It'll look something like this. Secondary test, in which price visits the area of the SC. SC is selling climax to test the supply demand balance at these levels. If a bottom is to be confirmed, volume and price spread should be significantly diminished as the market approaches support in the area of the SC. It is common to have multiple STs after SC. So, you could have many times that will bounce, 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 bounce in this area. It doesn't have to look this perfect. This is just like a very idealized scenario. That's why when I showed the Hang Seng, it looks very close to this. I mean, not exactly, because like I was kind of confused as to like if the ST and SC were the same and it was only one automatic reaction, but as far as the rest of it, it looked perfect. It looks perfect like this. So test. Large operators always test the market for supply throughout the trading range and at key points during a price advance. If considerable supply emerges on a test, the market is often not ready to be marked up. A spring is often followed by one or more tests. A successful test, indicating that further price increases will follow, typically makes a higher low on lesser volume. Okay. So you got the little test here before you make up the next move. The sign of strength, a price advances on increasing spread and relatively higher volume. Yeah, that's what we're seeing right now with China, right? Often an SOS takes place after a spring, validating the analyst's interpretation of that prior action. So we are seeing a lot of this right now. And we need more confirmation before I can believe that we are getting the hell out of here. This range in China has been made for a long time. So before I talk about the next two, we have to wait for what the Hang Seng does. And once it proves itself, I can finally believe it. I can finally say, hey, China's ready for the next stage where a lot of their trash is good for a great swing in 1 year. Now, that depends on who wins the election, I think. It really does. Because if Trump wins, he just talks shit about China all the time. I ain't gonna go for it. I don't like to be in a position where I have to worry about something that potentially someone says every day. That's just not going to work for me. So, but if you're a trader, maybe that's good for you. All right. We spent a lot of time on accumulation. Let's talk about distribution. Distribution. Okay? Distribution. What is distribution? It looks something like this. Complete opposite of accumulation. This is when it takes time to sell before it finally collapses. So I'm going to give you an example. Let's see here. This was one of my popular stocks I used to have. And I'm waiting to buy back. SMCI. This used to be a pretty damn good stock, you know. I didn't sell it at the top. I probably sold it around here, just before it hit the final area. I mean, I was quite surprised that it jumped this much just because it has contracts with Nvidia. But hey, that's how the market goes. Sometimes it's just irrational, very irrational, actually. It recently had a split. I think it split yesterday. Let's see. A 10-to-1 split. Oh, right. Very good. Now, let's look at this. I think it has a very, very distributive structure. So, something that started all the way back in March, you know? So you can see here, February to March. Now, I would say this area is the PSY. So the preliminary supply area. And then this is the buying climax. Okay. And then we get some kind of automatic reaction. We get a little test here, secondary test. And then we have a sign of weakness around here. See this? This big red candle. So that's kind of like the sign of weakness. Then we have an upthrust. And then we have a last point of supply right here. Maybe here. Maybe here to here is about the same. Okay. And then starts going down, down, which another last point of supply. And then you have a sign of weakness, kind of return, and a final move down here. I think this is the end of phase D. Now, if phase E is coming to fruition, I would say that this is about to go back to where this was. That's pretty extreme. I don't know. I don't know if it's going to get that cheap to $20. I mean, at least maybe it'll hit 33, 35. Maybe that's a good place to buy. I don't know. It really depends on October. But hey, watch it. Watch it. This thing's been an exact downtrend, just like as this Wyckoff is saying. So everything's a pattern. Everything is fractal. You can see all these things again and again and again. It's not hard to see. If you recognize it, more power to you. I think this is where, your eyes and your brain can quickly discern where things are going very efficiently. Now, I'm going to end this with an article. Let's see here. I think I'll use this article. So it's about to be 2 hours, so we'll go end it with this. The reason I bring up this article is because CKJ3, and I think T spells, even if she doesn't know it, she's using the same techniques. So the ICT technique. So this person who wrote this article on August 29th, very auspicious, very recent, right? 2024. Understanding market manipulation, comparing ICT and Wyckoff. Understanding market manipulation can provide a significant edge for traders. Two prominent frameworks that traders use to decode market moves are the ICT inner circle trader. So this is what CKJ3 uses, concepts, and Wyckoff's methodology. That's what I use. So that's why when CKJ3 was mentioning ICT and he was describing how he was doing it, it looked very familiar to me. The way he was doing things, even he's using different names and different terminology and different ways of looking at something, I could recognize right away. It looked pretty dang familiar. While these approaches have distinct elements, many ICT concepts are essentially rebranded versions of Wyckoff's principles. This article will explore the similarities between ICT concept of seek and destroy and Wyckoff springs and upthrusts, highlighting how these methodologies converge and how ICT largely builds upon Wyckoff's foundational ideas. Okay, ICT seek and destroy explained. The ICT concept of seek and destroy revolves around the market's tendency to hunt for liquidity. That's what CKJ3 keeps on talking about, right? Like he's trying to explain this to Ben Thorpe. Like, good luck. This is way over some people's pay grades right now. This often involves targeting stop loss levels where retail traders have placed their orders. Typically, this is visualized through sideways, choppy, or range bound action on the index, where price will trade above or below a significant pivot for the session and reverse immediately. These types of trading days are typically more challenging to trade depending on how wide the range between the session high and session low is. That being said, if you can identify what type of trading day it will be before the day begins, like we often do in Traders Think Tank, you will be more prepared to capitalize on these sessions, more on how to trade these seek and destroy sessions later. Okay, let's look at this chart here. Stop below significant pivot, stops above significant pivot, stops below minor range, stops above minor range, sell stop triggered, long taken out, new shorts on breakout trade active. So, okay, this is pretty interesting, I think. Yeah. Yeah, let's see. So this is the seek and destroy trading session. Yeah, looks pretty familiar. Wyckoff spring and upthrust explain. Wyckoff's methodology, developed by Richard Wyckoff, includes the concept of springs and upthrusts. A spring, also known as a shakeout or bear trap, occurs at the end of a downward trend when price dips below a support level and then quickly reverses, trapping bearish traders. Conversely, an upthrust or bull trap happens at the end of an uptrend when the price moves above a resistance level and then swiftly reverses, trapping bullish traders. A spring setup. The spring setup is one of our favorites in Traders Think Tank because it can position traders with a very strong entry with a momentum move. Yep. So the similarity between seek and destroy and the spring setup. Market manipulation focus. Both concepts are built on the idea of market manipulation by larger players. They recognize that big players often create false breakouts to trap retail traders. psychological traps. Both seek and destroy and Wyckoff traps aim to capitalize on the psychological traps set by retail traders, set for retail traders. Have you ever experienced the frustration from getting stopped out just to watch the price action to do what you expected? Then sudden reversals can be anticipated and capitalized on by prepared traders. Yeah, I've seen people get fooled. Liquidity pools, the idea of targeting areas where many stop loss orders are placed, is central to both concepts. These zones of liquidity become prime targets for market moves as they act like magnet for price. Reversal opportunities. Both concepts look for signs of liquidity grabs or false breakouts to identify potential reversal points in the market. All right. So anyway, you guys can read this stuff on your own. I think I covered enough of that. Where to find money to invest in stocks? No work, no money, no stocks. Um, I mean this is just a product thing. I mean, if you're thinking about it this way, people will always find products to buy somewhere. And it's not about money, right? Okay, it's just about consumption right here. This is going to affect consumption and inflation if it lasts more than a week. We'll see if it lasts more than a week. Anyhow, so that article is here. I'll put that up here. This is, you can look it up yourself. And if you want to look up the Wyckoff method, you can look it up here. Right there. Yeah, that's how it goes. And before we go, let's look at Hong Kong. We're about to hit a pre-market. Yep, right there. And I don't know, I probably have a bunch of other links I better give. Let's see this one. Man, I need a mouse. This is so annoying to use a trackpad. Isabel.net, pretty good website if you want to look up data and things. Not bad. And I'm gonna put up Martin Shkreli's Goatdale terminal. Yeah. So I think this is very interesting for you guys to go to. It's pretty neat, but if you're not financial, like a fundamental analyst, maybe probably boring, but hey, whatever. I think the next stream I do probably be like candlestick charting, things like that. See what else, what other links I used. So the Godell terminal. That's what Martin Shkreli's web-based app is. Good. And distribution and recumulation. Okay, Jaden. I don't think it matters what I think. All that matters is the market. Everything I do is just based on the market. I just follow whatever the market thinks it should go. Tesla right now, no, I wouldn't buy it. Maybe later the month I would think about buying it because it's been making a long base. Okay, let me look at this. Let me look at this for you. Because there's a Chinese competitor. Okay. Just Chinese competitor. I've been talking about this for a while. Several months actually. I'll show you this. Because if you look at this chart, so BYD is the Chinese electric car company. You see this here? Back in January 2024, you see this huge volume spike? Somebody was buying because the next damn week we just moved back up. We started moving back up. So that this candle here, this red candle here at this near the bottom of this range, it must have been buyers. And now we see with the Chinese government putting stimulus, it's getting to the top of this range. I expect it's gonna break out. It's gonna break out this huge range from 2021. This is gonna be. Now compare this to Tesla. Compare this to Tesla. Doesn't look very different, does it? Let's go back. You see that? Now you see Tesla. Let's go back. What's the difference? There's no difference. Because basically, Tesla needs Chinese consumers for its stock to go up, essentially. That's why you see Elon, he's just like trying to do all these gimmicks like, oh, we're going to do automated taxis. Oh, we're going to do cyborgs. Oh, we're going to do this and that. Those are just gimmicks because in truth, if Tesla stock is going to go up, those gimmicks, Cybertruck, all that shit, whatever, that they ain't gonna be the revenue kings. That I mean, later maybe, yeah, okay, you're gonna do cyborgs, sure, whatever. You're gonna do automated taxis, yeah, sure, whatever. But there's a lot of other companies doing the same thing with automated taxis. Cyborgs, okay, that's new, but how long will it take before we're gonna see cyborgs, right? And the other thing is their Solar City assets, which is like it's totally dependent on if the Democrats can win enough of Congress to pass through all this stuff where they say, okay, everybody has to do green energy and require, Solar City type things where they have the batteries for the houses and the solar roofs is like, it's, you guys still have to compete with Chinese freaking Chinese like dumping all their cheap freaking silicon everywhere. So yeah, from just looking at this chart and when you compare it to the other one, it just tells me that okay, Tesla needs to expand in the Chinese market. And the other thing too is that Tesla also probably would love to get the Indian market. So those two markets are huge, right? With the middle class. So actually, it reminded me, what are the growing middle class? What is like the growing middle class? Who is going to be the new middle class actually? And I don't think it's going to be white people. I mean, the new middle class is going to be somebody else. Like that's just how it is. Yeah. So you're going to have to cater to the Chinese and Indians, I think. So let me see. Did I look this up before? I swear I did. Middle class. Okay, okay, okay. Huh. Okay, okay. Did I look that up? All right, let's see. 100 Okay, this is perfect. Perfect, perfect, perfect. Okay, this is perfect. I love this website. I love this website. So, who is the new middle class? This is the question. This is the question. So, so let's end it on this note. Let's think about who are the new consumers, right? Who are the new consumers? 113 million people will join the global middle class in 2024. 113 million. The global consumer class amounted to 4 billion people in June of 2023 and is expected to reach 5 billion in 2031. So 57% of new consumers in 2024 will come from either China or India. You got 33 million Indians, 31 million Chinese, and everyone else is blah, blah, blah. Yeah, look at it. Yeah, Vietnamese like me, right? 4 million. Indonesians, 5 million. Bangladesh. That's still pretty good. It's a lot of people, but still, over 60 million new middle class people are from China or India. This is who we're catering to, man. This is who we are catering to. This is why people spend so much time and effort trying to sell to these countries. That's where the growth engine is. Um, so Tesla stock, if you look at it, it makes sense. It won't go up until it breaks into these markets. All that other stuff with the taxis and things, I don't know. It takes time to really make it. Yeah, so in any case, you will see, guys. We will see. All right. So it is about 4 a.m. Eastern. I think we'll see if HB wakes up in a little while to start his little thing. I'm gonna end this stream and you can save it. Remember, donate, give a cash app, subscribe, like, all that good stuff. I gotta market this. You see the cash app on the screen, the banner. We gotta keep this show going. Porsche's doing all the work here. HB's doing his morning streams. He's gonna do more of the entertainment side of things. John, he does his interviews. He runs the dang show. Please give a donation. Thank you very much. Yeah, I'm gonna put it on here. Just to emphasize the point, you guys should donate. Donate, donate, donate. He needs weed. John needs weed. He needs beer. All right, guys. Portia needs your donation so she can keep doing clips. I got some clips for her to do. She needs some money to do that. Donate here. And HB, He's gonna run the drama streams mostly. I'm just gonna get him to run the drama. I can't do the drama stuff anymore. I gotta focus on the stock stuff. All right, guys. I can't do that no more. I'm getting tired. I'm getting tired of trying to like wrangle these Thorpes and fucking orbiters and all this shit. It's just too intense. I gotta focus on one thing right now. It's October. Second day of October. We're ready to go, folks. Things are going to get real exciting. China already launched a new salvo of interesting stimulus. We got Jerome Powell about to reduce the interest rates. We got Israel, Iran starting trying to do some bullshit. We got the Saudis going like, we don't care about Russia. We're just going to pump our oil. Oh, man, so many interesting things happening all at once. And we got elections in 1 month. So I'll see you guys. Have your money ready. Open your brokerage accounts. We're going to be working day and night trying to find what's the best opportunities for your buck on this channel. The John Galt, the Urban Landlord on YouTube. All right, good night, folks. I'll see you on the flip side.